Video morning brief for the U.S. stock market, April 13, 8:49 a.m. Eastern Time. Rich pause for critical point. Decided to throw in another video here instead of audio. This morning, looked like the producer price index, I believe it was, coming in 11.2%. We haven't dialed that in into any kind of model, and I'm not so sure it's really going to be that important, but it is well watched, and inflation is on everybody's mind, so it likely is important, at least from a psychological perspective, how they may want to trade. And what I noticed was the futures market was higher last night, and even towards the end of the overnight session, it moved up some more. And I thought, hey, boys and girls, let's not push this too high, because that means they got to come in and sell on the cash market and bring it down, fill the gap in. And they may just assume that's a bearish pattern, so just keep on selling. Well, next thing I know, they bring the futures down to where we've actually been minus to about breaking even right now. But that was partially due off of that producer price index. That may be too high for some. Yesterday, I think they were fine with the CPI coming in at 8.5 because the trade guess had been 8.4. And yes, that was higher in some of the prior reports, but I think they felt like good enough that they nailed that one, okay? And that there's increasing discussion that maybe inflation peaked in March. Well, maybe not. There's people, Jeremy Siegel over at Wharton Business School, come out and he said it could be quite some time. The Fed's got a lot of work with this interest rate stuff to bring this inflation down. But I'm seeing used car prices crashing. In fact, let me stop and see if I can bring that up. Here we go. This is just a 1 month % rate of change, okay? Used cars and trucks exploded coming out of the pandemic. It's coming down, and now minus. They're getting cheaper. I noticed a used car business down the road here from us. They've been running very light inventory. They were telling me last year how tight it was, how difficult, huge demand, high prices, but couldn't even hardly find them as well, and worried of getting stuck with high prices. But yesterday I took a look at their lot, and it's plug full. They really used their credit and loaded up on vehicles. They're out there. Now we just got to see, is that demand truly shifting and prices coming down? At least the supply looks a little better, and this chart suggests they're actually trying to pull it back a little bit in that regards, okay? And then, of course, we know the inflation story here. For those of you who didn't see my free video put up on inflation, this is your super cycle of higher inflation, then down to here, and then up to here, and it just stalled out, respected the low, and now, of course, it's speeding up. It's working, but really, inflation fluctuates. A lot of people are scared it's going to the moon. It really doesn't work that way. I think we're about over and done. Okay, so that's some of the news cycle coming in this morning here, and I backed the futures off from that strong overnight trade. So where are we going on the intraday chart for these level fours? Intra-week swings, and how does that build into those monthly buy-sell signals for level 3? This was a level 4. We warned this double bottom didn't look right. We're concerned maybe it would be taken out because it was actually 2 days, consecutive days on a daily chart. That's not a good pattern in my opinion. Even though on this chart, this was a more normal looking level 4 for intraday purposes, okay? And of course, it took it out. And we had that ready, set, go pattern that was bullish for a while. And I told you, but this was a little too low. Not too sure we should include double bottoms in that ready, set, go bullish pattern. And as it turned out, yes, that failed. It didn't work. So we've come down, and what the model's saying is too late for level 4. So it's revised to put the level 4 here, saying it didn't work. They were too bearish. They couldn't even pick its head up. But now it's trading. It's fluctuating. Somebody's buying it. Selling is still present, but somebody's buying it. This level 4 is broken up, choppy. I think it's bottoming out. Problem is, it may not bottom out to the end of the day. If they want to sell it all day today, they can do it, okay? But it's met enough requirements, excuse me, it can met enough requirements to bottom this morning. And I'm pleased that the futures isn't that ambitious, okay? Because there's some kind of pattern where if they put it up overnight, the cash market's going to come in and sell it, and the day session futures traders are going to sell it, and they put it back down. And if you were in a downtrend in that, people have learned sell those overnight bounces. Okay, if you're in an uptrend, they might not be so enthused about doing that. But they love to fill these gaps, okay? They just love to trade them. And for other people who are following the larger trends, they're probably nuisances more than anything, okay? Well, we're not going to get much of a gap this morning at the open day session. The futures market's kind of saying, we'll wait on the cash market and see what they think of today's news and see what they want to do. I'm optimistic. It's bottoming today. It's going higher. Now, what we do have is a more normal looking level 4. Yes, it's in a bearish, larger downtrend. The level 4 top, quite confident of that. So what we need is put the level 4 bottom and it'll move up like this. Okay, we'll see it swing right up into here. So it ought to rally into tomorrow, if not into the following day. So if we can just get this to trade over the overnight high of 4428.50, I think that's constructive action. If somebody wants to nibble at this market, bargain hunt a little bit, and that there's a chance the level 4 trend is up. Now, if it trades above the high of yesterday at 4466.75, and the cash market is probably going to be in the 4470s, trades above that high, not only is the level 4 up, but you also have to worry, is it time for it to top out? But we ought to be thinking in terms of that's strong enough buying to consider a level 3 bottom in place, a level 3 buy signal, the monthly buy signal or bottom, okay? And if it can do that, it will trigger trades above that high. In other words, it will trigger upside objectives to get us at least back up to this old level 4 top around 4516, if not above 4550s, but probably not to 4600. However, if it can get that high, we may see a series of stair-stepping upside objectives that just keeps taking it higher and higher. This level 3, coming level 3 bottom can lead to a rally higher into next week, and it can also lead to a bias of the level 3 trends as mostly higher all the way into June, okay? Now, the NASDAQ, of course, is holding us back here. But at least this morning, the futures are kind of stable. This is the NASDAQ 100. Kind of stable, so I'm hopeful they're trying to bottom out right along with the S&P 500. Hopefully they'll take out yesterday's high and be on the same page. The Dow Jones is basically on the same page as the S&P 500, so we really need the NASDAQ to get on board here and help us out. Now, if we move to the daily chart, okay, what we have is that the market is just beneath the 50-day average, not necessarily a good sign. We needed to take out today's overnight high, move higher, need to take out yesterday's high. We need to get back up into this band of 50, 5-day, 200-day, 100-day averages. And the model is saying if it can bottom for level 3 now, it ought to rally over the next 1, 2, 3 days, but maybe as many as 4, 5, 6, 7, 8 days. So what it did was it added more time to rally, and then it delayed the earliest for level 3 top by 1 day. So again, add those two together, it's saying it can take longer to rally. There's more time to go. This can work, okay? And it's oversold on the daily chart with very narrow spread, and it's very oversold. So it's a warning, yes, have faith in a model looking for a level 3 bottom. Now, of course, the level 3 is just monthly. It's short term. Some people call it very short term. There can be noise and fluctuations there more than, say, the larger trends. So I'm sure there's some people still going to question, can this thing really bottom? And unfortunately, it can take all of this week to find a bottom. It could bounce for a level 4 just intraday instead of 1 or 2 days, and then it's just down for another day or two, and it just drags on. We're running out of downside objectives. What I forgot to show you, by the way, when we trigger these upside objectives, all of these averages can be upside targets, but also resistance where a bump it's had. But there is potential to get it up close to 4,600, even for this level 3 trend, but I don't believe it. I think it's going to take longer. And here's what the model's looking for. Rally into level 3, pull back for level 3, and first opportunity for a level 2 bottom in the S&P 500 and Dow Jones, but not for the NASDAQ. Then it should rally into a level 3, come back down for a level 3, and if for some reason it was a weak rally or a very sizable decline, that could be a second opportunity for level 2, but that may also coincide with the better time for a bottom in the NASDAQ. Okay, so this NASDAQ can give us some headwinds, some problems in terms of the entire stock market moving higher. Then it should move up again and down again, and eventually it's going to move up into June, probably, maybe late May, for level 2, level 1 tops, when we may yet get it back to the 4,700s. I kind of doubt it's going to go above 4,800 and give us a new record high, but it's a possibility. So I realize this trend looks ugly, and I really do think we did the right thing of moving the level 2 top here related to the Russia-Ukraine war and move it to here, and the decline is more important in the sense it's about our economy, it's about our inflation, interest rates, and therefore our stock market. I think that makes more sense. And the beauty of that is it shoves that level 1 further out so we still have plenty of time to rally. And I'm also thinking, with any luck at all, this is going to rally enough so that when they pull it back in the level 2 bottom, the level 2 bottom will be higher, a little bit higher than, say, this week's low. In other words, I'm hopeful we've got most of the selling done in terms of price movement, but we may have lingering waves of selling here as people try to sell rallies because they're so worried about the future. And I think they're overly worried. I realize we have a long ways to go to fight this inflation. Interest rates can go up quite a bit yet, but I'm not convinced the market is just going to keep going lower and lower just because of rising interest rates. The economy is still growing even as we hammer away at inflation and can hurt our economy. It's still going to grow. The net result is it just won't grow as fast. And these businesses are making tons of money out of inflation. Some of them are getting hurt. Some of them are neutral. Somehow we need to shift gears so the neutral ones and the ones getting hurt start making money. And the balance is going to be okay with the ones making inflation. They'll just make less and less. They're not going to immediately drop to zero or start losing money, okay? And there's going to be a sweet spot in there, I think, that we're going to be okay. So I'm still bullish for this year. I'm bullish into 2024. I'm bullish this decade. But we got problems right now and headwinds here and issues. But even then, the model's saying this can work higher into June. It just may be a struggle at times. Any rate, here's hopeful that they're done selling here and they can put this level 3 bottom, but I got to warn you, it may take all week. Maybe they won't even find it till Monday or Tuesday of next week. Now, I also wanted to show you something on the intraday I forgot. I had this objective set here, okay? And this wasn't met for the time for a level 4 bottom. It was just met to give me guidance price-wise. Well, it dipped, stopped there, dipped into about mid-range. That would be a level that I could also add. That would be if I got to have a precise single number, it would have been mid-range. And it bounced. Then it came back down, and look at that. Bottomed at the bottom of the target range. And then recovered up outside of it. Now this morning, granted, it's coming back down into it. And maybe it's just going to keep going lower and we got to come up with new downside objectives. But right at the moment, I'm pleased that this market is at least short-term to very short-term oversold in my opinion. It's met some of these targets on the way down here. And it just looks like this is a good opportunity to turn this market around and move it higher, okay? Now, on the weekly chart, and sorry for taking so long, I'm now turning this in more like a weekly update or something here, but we need to get it back above these 5-week averages, okay? And I'm good that it's broke below it. I'd like to see it recover somewhat by the end of the week here, but it still looks, yes, headwinds all the way through April into May in the sense of a level 2 bottom coming in. And we've extended late so that it matches with when the NASDAQ may bottom. But the point is the S&P 500 once again may bottom ahead of the NASDAQ. And the NASDAQ may not go much lower into that bottom. But looking out to June, we've got to give it a chance to be bullish. Now, as far as the percent stocks above the 200-day average, obviously it's backed off. It's looking okay, not so good for the NASDAQ, better for the S&P 500, but it's okay. I can see it could be normal fluctuation. So I don't think we're into some kind of problem when this market's just going to keep going lower and lower and lower for 3 or 4 weeks, put in that level 2 bottom, and then up. I may be missing. If you're more bearish than I, or you're bullish but you're more worried than I, manage your risk the best you can. I may not realize just how low this can go. And I don't like this weekly indicator acting that bearish. But right at the moment, the model's saying they brought it back enough. It may be difficult to take it higher for a while. And we may have to chop around for a while. And it may even be just a tad lower in a few weeks. But in the meantime, it's setting up, at least ought to pick its head up some and give us a little bounce. I have nothing to say on crude oil other than I think next week it'll be back down. It's trying to rally into a level 3 top here that may not show up until the end of the week on into early next and then down next week. Bitcoin, I think it's got lower to go. It's trying to move higher today, but not so much. And then the gold market, I think the trend is up until it violates this week's low. Then I think it'll be down, and I think it's got lower to go when looking out a month or two. But at least gold is trying to work higher, and I'm fine with that for the moment. But I don't think we're going to get any significant major up move in gold. And I don't have much to say with dollar. It's still working higher with these higher interest rates and fighting the inflation and this and that. Now here's the interest rates. This is the interest rate futures. I'm going to use this more and more because it updates during the day. And then I have the cash interest rates that only updates at the end of the day here. At any rate, I do think this is a level 3 top. I do think interest rates are going to come down. I think they're going to take out yesterday's low, and they're going to come down like this, and they may not go any lower than, say, 2.63 or something. If they were, great. I think this can encourage the stock market to pick up its pace to the upside here in coming days. I do think a short-term bottom can show up in just a couple of days, however. Interest rates may be higher later. However, this is a significant enough top. It might be more than a level 3. It might be level 2, level 1. We might see interest rates back off until it's time for the Fed to raise their rates in May. That would be rather helpful too, okay? And so we'll see what we get. Obviously longer term, there's going to be higher interest rates, but seems like there ought to be a few setbacks once in a while kind of help us out here. Monthly chart, obviously not looking too good for us, still trying to find the low of the month, and then I think it still moves higher into June and moves higher this year, but obviously we've got some issues right now, and we'll just see if we can find that bottom. Now, the reason I brought that up is I really wanted to pick up this VIX chart, and yes, it's, acting bearish here in a sense. It's bullish on the VIX, bearish in the stock market, but the model's saying by next week, VIX ought to be down some. Ideally, it should at least stall out to work a little bit lower into May. I think we got an opportunity to work this stock market higher still. All right, that's all I've got for you at the moment. Let's see how they open up in the cash market. Here's our hourly cash chart. And what I wanted to make sure you understand, we have a double top here on the hourly. Now, that worked, okay? It was a bearish, and it wasn't telling me to bet against it at all in terms of very short-term trading intraday, intra-week. However, when you convert that to a daily, it's a 2-day consecutive double top. That's a warning to me that probably won't hold. That is a bullish signal. Someday the market goes above it, okay? And so to me, that's some kind of upside target, but it doesn't tell us when, how long it'll take. Then we have this gap lower and traded lower. They traded it back and started to fill the gap, gave up. That really discouraged them, but the reason is they had to fill this gap. I think they overreacted, filled it. It's time to take it up. And the point is we have a gap to fill to the upside. We don't have any gaps to fill to the downside. I think this market's going. So to me, that's also a bullish signal. The market's going back up someday. And the hourly is oversold and was on the buy side by the close yesterday. Now we have to see what happens with the actual opening of the day session. Does that change that? Do they want to be more bearish? Okay. But I'll be rather encouraged if they traded above 4416.95. And then we'll just see where we go with it. But in my opinion, this gap, the next time they put it up to fill it, I think they just keep on going. And then they're going to test this. And if they can break that, I think it's a sign it'll keep on going. But there's always going to be these level 4s, level 3s working against us along the way from time to time. Past results are not necessarily indicative of future results. Have a great day. Thank you.